I'm just doing this so those who don't, I'm recording so that those who don't join, they will get the opportunity to rewatch. Okay. All right. So the strategy is basically called the RSR. Okay. Remember RSR. It is not RSI. All right. So RSR. So the first R is for what we call rate. You guys should pay particular attention. Okay. It's really going to change your trading if you master this. So the first one is called rate, the S is a fixed, and then the R is return. So RSR. So basically rate, shift, and return. Keep that one in mind. Now I need to also give you two notes here before we continue. The first note is that the market, number one, the market is in constant search for liquidity. The market is in constant search. Very, very important. Constant search for liquidity. And then number two, your stop loss. That is the stop loss that we all know. Okay. This class is basically gonna be for those who have been in trading for some time. If you are new into trading, then some of these things will be a little bit hard for you, but it's very easy. So your stop loss is the same as liquidity, and it is also the same as money. Okay, so key thing, the market is in constant search for liquidity. And we are saying that for point two, we are saying that your stop loss is the same as liquidity, and it is also the same as money. So if you link the two, what we are basically saying is the market is in constant search for money or your stop loss or liquidity. Agreed? Do you guys agree? I want to hear someone something so that I know.
Yes, we agree.
Perfectly. No one is speaking, and I don't hear it.
Yes.
1 second, guys. I don't know why. Let me share my screen again. Share my screen again. Share. Okay. You guys can hear me. So the market is in constant search for liquidity. Your stop loss is the same as liquidity, and it is also the same as money. Okay, let's quickly move on. Now, when the market creates a swing high point like this, the one we have here, at the top here, what happened? We had the market going down. It basically means that people executed sell trades there. Okay, people executed sell trades. Now, if that is the case, from the basic concept of trading or from how we have been taught trading, it means that anytime we execute a sell trade here, we need to put our stop loss above, okay, as a safe guide or a safety net, so that when the market goes against us, we don't lose so much, right? So at the top of every swing high, what we have there are stop losses, right? So at the top of swing highs, we have stop loss. And remember, the stop loss is the same as liquidity or money. Same way, at the bottom of every swing low, what we have there are stop losses. And remember again, your stop loss is the same as liquidity or money. So here we have stop loss. Good. Now, let's come to the general movement of the market. If the market is basically going up, it creates this series here of higher highs and then higher lows. That is the upside of the market. And when it is going down, it creates this series of lower lows and lower highs. I think if you have been trading for some time, this is very basic. This is very, very basic. Now, let me shock you guys. Now, let's consider the higher highs and higher lows. In Forex terms, we call it the bullish trend, okay? Now, when I take this particular swing high point here and I put it here, you will see that it is almost the same, okay? Even though these are the higher highs and higher lows, but when I take this swing high point, it is basically the same. It is basically the same as the higher high, and it's the same here, and it is also the same as this, right? Now, to even shock you further, if I take this swing low here, you realize that it's similar to this here. Okay, it is also similar to this one here. It is also similar to this one here. What does it mean? It means that on a bullish trend, the market has liquidity both at the highs and the low here. So there is liquidity here. There is also liquidity here. There is liquidity here, and there is also liquidity there. Now, when we go to the bearish trend, it's the same thing. Okay, if we take this, it has a similar movement to this one here, this one here, this one here. And if we take the swing high too, if we take this, it also has this similar movement there. So on the bearish side too, the market has liquidity both at the highs and the lows. So here, there's liquidity at the yellow markings, right? If that is the case, and if we are also saying that the market is in constant search for liquidity, then what's the market going to do? The market is going to keep taking out all the swing highs and the swing lows. So let me give you a typical example. The market will keep chasing the swing highs and the swing lows. Now I'm going to give you an example. Good. Now, if this particular market is going up, it goes up, it comes down, it creates liquidity here. Because the market is in constant search for the liquidity, it will go above it and take that liquidity, right? Then again, it goes above this and pick this particular liquidity. It goes again, pick this liquidity until there's no longer any more liquidity. And what happens? Where do we have the next liquidity? Remember, the ones at the top have already been taken out here. These liquidities have been taken out. So where do we have the next liquidity that the market could come and grab? Anyone? Remember, on a swing or on a bullish trend, the market has liquidity both at the highs and the lows. So the market has already picked the liquidity at the highs. So the next level for the market to come is to target the liquidity at the bottom here, this liquidity is here. That is why the market will never go up forever. It always comes, if it has exhausted the liquidity at the top, it comes and targets all the liquidity at the bottom. Are you guys following? I believe you can see everything clearly. Let me see what someone wants to speak. Guys, talk to me. Do you see everything clearly and are you following?
I have a question here. Is when market is changing the direction where the liquidity will come and grab the lower high.
All right.
But when in uptrend, it comes to grab the previous high.
Okay, so let's continue. So since the market has already picked the upper liquidity, it will come down and now target all this lower liquidity. Now let's look for the example on the bearish side. Then I will now tell you the meaning of the RSR strategy. Now, when the market is going down, remember there are liquidity at the bottom here. So anytime it goes below, it picks that liquidity. Anytime it goes below, it picks that liquidity. Anytime it goes below, it picks the bottom liquidity until there is no longer any more liquidity. And what does it do? It will now target the upper liquidity here, these ones, because these are on tap, stop. And remember, guys, I've said liquidity is stop loss. So it will target the stop losses here after it has exhausted the one at the down. It will target the ones here, right? Now, once the market goes above this particular high here, that is, it takes this liquidity, we call it a shift. A shift because the market was initially going down this way, and now it is trying to push all the way up. So we are kind of having some shift in the market. Now, anytime the market picks liquidity, we call it a raid. So now we are going to the RSR strategy. So raid basically means the market picking liquidity. So here, there was a raid here. I'll put R. The market went above this particular level here, and we call that a shift. The market was going down initially, then it went above, targeting the other liquidity. We call that a shift. Now, when there is a shift, the next thing that we need is a return. Basically, a return is the market coming down like this, giving us a good price, okay, a very good price to execute a buy trade. And when that happens, we can take the buy and we ride it. Now, I think some of you already know this, but the trick here is, how do you get in? How do you even enter? Because now we understand that when the market is going down, it picks the bottom liquidity, and we're going to have a raid that is taking the bottom liquidity. Then we're going to have a shift that is going above the high here. And after a shift, we need a return. So the return has come. Where do you enter? How do you enter? How do you even get in? Because this is the point where someone may know a strategy, someone may know a setup, but you'll be afraid to execute. Okay, this is where you'll be afraid to execute. Okay, now let me show you something here, and then that is very interesting. I'll clear all this. I'll clear everything here. Now, let's draw an example of this setup here. And I'm going to label it for you guys to see it well. So here was a rate. When it went above this level, we call it a shift. That is the S for you. And when the market starts coming down, we call this down movement a return. Good. Now, once all these have been met, okay, let me put here a return. Once all these have been met, guys, you have about 3 or 4 choices, okay, of how to go about your execution. Some people put limit orders. I am not against that, but at the same time, I don't use limit orders. And I have a simple reason. The fact that you have spotted a setup here and the market is coming down, it does not mean it is a compulsory move to the upside, or the market must move by all means. I am someone who is in for allowing the market to reduce its momentum. If I want to go on a buy, I want to see that the sell momentum is down before I go on a buy. If I want to go on a sell, I want to see that the buying momentum is down. So here, can you guys hear me? Wow.
Yeah. It's very clear.
Hello, everyone. Yeah. I think you can hear me. Yeah. Thank you. Okay. So if I want to go and buy, I want to see that this down momentum here, okay, this down momentum, I want to see a reduction in that down momentum, because the market at any point in time can be influenced by a news out of nowhere. It can be influenced by a news, and this move could be so sharp to the extent that your limit order will be nowhere to be found. It will just go straight through your limit order to your stop loss level, right? So as a trader, what I encourage, okay, every trader to do is that when you find your spot to execute a trade, please again, wait for what we call confirmation. Confirmation means that there are other traders, possibly bigger traders than you, who are interested in the same level that you are interested in. Wait for that. When they come in, join them. When they come in, and how do they come in? How do you know that they come in? They come in the form of bullish candles, because we want to take a buy. We want to see bullish candles here before you join. So you have your setup, you have everything all in place, but confirmation is so key. I have been trading for a long time. Those of you who know me, I've been trading for a long time. I've done all that. I've used limit orders, I've used stop orders, I've used market orders. I've gone through all the ranks. And now I am glad to say that I stick to market orders after confirmation. After confirmation, I no longer use limit orders, because I believe that I am not that perfect to predict exactly where the market will reverse. But I prefer to use confirmation and market order, because I believe that when other traders also think the same way that I do, possibly bigger traders than I do, or bigger traders than myself, when they think the same way as I do, I can now join them. Then we move together smoothly. I don't want to be the one to be the best trader to give you the sniper entry. Meanwhile, you only get one sniper entry, and your next 10 trades will be losses. You give one sniper entry, then your next 10 trades will be losses. If you're doing it and you're making money, please stick to it. Now, another way. So one way you can do or target this pullback or this return is to use the Fibonacci. Those of you who know the Fibonacci, I think it's a very great tool for you to utilize. So you can strike the Fibonacci, and then you will target the 618 or the 786 level, and that is going to be the area where you should be looking for confirmation. Okay, the area where you should be looking for the confirmation. That is the Fibonacci level. Okay, so aside the Fibonacci, another thing that you can use. Okay, another thing that you can use is basically what we call a gap. I think for a gap, I will need a little bit more time to explain to you. Maybe not today, but those of you who know gaps, and those of you who have been doing ICT, which I also believe that it has a lot of unnecessary ways and concepts that you don't need to learn everything to make money. You can use that gaps, okay? But I will stick to the Fibonacci, and then a confirmation candle in the form of a green candle. Then I execute my buy. That is all. So next time when you go to the market, look for this pattern. Okay, the market should give you this rate, that is taking the liquidity here, and we call it a rate. Then the market should go above this particular level. Then we call this a shift. Okay, that is a shift in the market direction. Then after that, you wait for a return. This is where a lot of traders, right after the return, they execute their order, they execute their buy. I don't blame them. Everyone and how he or she trades, so it is fine. If it's making you money, please stick to that. But for me, if the return comes, I will still wait for a confirmation in the form of a green candle. And that is how I basically do my thing. Now, if we are to go to the market, this setup, someone may ask which time frame do I look for this setup? Mostly I look for this on the 1 hour and the 15 minutes. People do 5 minutes, even 1 minute. Yeah, but I am comfortable with 1 hour. I am also comfortable with 15 minutes. Not much, but 1 hour mostly. That is where I do my killings. 1 hour. Sometimes I do 15 minutes, right? I sometimes do 15 minutes. So don't blame me that Carlos, you said 1 hour and now I see your chat on 15 minutes. What happened? Nothing happened. All right. I am at liberty to use any time frame. Guys, it basically works on any time frame, but mostly I prefer the 1 hour. It looks like someone wants to speak. Okay. Is it Sammy? Sammy, do you want to say something? We want to hear you.
I was about to ask about the time frame, but sorry. Please, can you hear me?
Yeah, I can hear you.
Yeah, I said I was about to ask about the time frame that you use, but I think you answered the question.
Yeah, so hello, Carlos. Carlos.
Yeah, I can hear you guys.
Okay, so I also want to know whether the confirmations, when you use the FIP, and then you're also looking out for the confirmation candles, do they all need to be in confluence, or you can just pick any of them at any time, or you need to have the FIP at the 61.8 and then the confirmation candle, or telling the same thing before you can execute.
Okay. Thank you so much for adding the topic of confluence. As traders, okay, always we want to be so sure of what we are doing, so we add something called confluences, which could be you're looking at numbers, psychological numbers, you're looking at support resistance levels, you're looking at divergence, and all those additions. I think yes, they are good, but trading must be a lot simpler and easier than you, confusing yourself with a whole lot of things. I'm not saying looking for confluence is bad. I'm saying that you guys should make trading very simple, because at the end of the day, trading is just about up movement and down movement. Something very basic. So even if you don't do any analysis, you can just put in a trade and it can go in your direction. So for me, yes, sometimes when I see confluences there, it's fine. It just boosts my confidence. That's fine. But I don't pay much attention to all those things. I only pay attention to setup and also the confirmation, basically. I believe you have been answered.
Yeah, it's very clear. Very clear.
All right. Yeah. Any more questions? Does anyone else want to speak? Okay. So I think you guys you really get this set up very well, and let me check on gold. Let me check on gold. Okay. I'm not saying the trade I took on gold today I used setup, okay, but I just to check what we can find these things. No problem. brought them back in. All right. First of all, I see extremely bearish. The market is just going down now. For a short term now, it is very bearish. What I do is that if this is the only setup that I know in the world, this is the only setup that I know in the world, then what I can do is wait patiently for this market to come a little bit up, because already the market has gone up. It has come down. So I will wait for it to go a little bit up like this. And when it goes, it comes back down. That is when I wait for it then. Thing is that traders are not patient. Okay. Trading is about taking setup. It is about taking quality setups.
You are breaking up.
Yeah, they want to hear you. What do you have to say?
Yeah, your voice is breaking up, so we can't hear you well.
Okay, let me check. Okay. Okay, so like I was saying, trading is not about taking so many setups. Trading is not about taking so many setups at the same time. It is about taking quality setups. Quality setups. So instead of you taking 10 trades in a day, why not wait for the best setup to form? And when it forms, then you can risk everything on it instead. Okay, so I am very patient. I think one thing that has really helped me in my trading is that I am very, very patient in waiting for my setup to form. And when it forms, that is when I go in so hard. Those who are in the strategic loading group, I can tell you, those who started with $50, they know I don't post a lot of signals, but most of the signals I post, about 90% of them, we are winning. And those who started with $50, I believe some of them are having about $80 now. $80. I don't know, because I've not asked them to send the screenshot of their current. But from my calculation, they should be making about $80. And it is based on sending them quality signals. So that the last step I want to add, just wait for your setup to form quality and go all out on that setup. Instead of you trying to trade every single setup that forms in the market. Instead of doing that, wait for the quality ones to come and go all out. I think that is going to change your trading career forever. It has helped me, and I'm telling you, it is really going to help you. Let me see whether I can find an example of this RSR strategy. It normally forms in the market. Trust me, guys, it forms a lot in the market, but let me check on it. It forms a lot. Let's see. Let's see something. GBP, USD. And you guys, this level, I'm still building myself up. Okay, when we will get to a certain level where I wish to be trading with you live every day, like trading with you live every day, and it's basically for free, because it's just those who want to learn one-on-one that I'm going to charge them, because it requires a lot of my time and data as well. So let's see. This thing shouldn't be hard to identify. I want the best for you guys so that you can easily spot one when you see them. Good. Let me see. Yeah. I think this was a good example of the setup. And yes, one bonus tip, guys. If you want to easily spot this setup, don't use the candlesticks. Okay, use the line charts. I think it is so easy for traders to spot setups when using the line chart as compared to the candlesticks. The candlesticks is a little bit choppy. It has a lot of wicks, and it is so difficult to identify setups. So here, with the line charts, I think we can identify a lot. I see so many here. I see this here. This was one of them. So this was the rate here. Okay, when market went below this particular low, remember we've already said that below every low we have liquidity or stop losses. So when market goes below it, that is a rate. And then when market went above this particular high, that was a shift. So the last thing that needed to happen was that the market needs to go or give us the return. Okay, the market needed to give us the return, and that return is where we look to execute our buy. And let's see something now. Now that we have identified the setup on the line chart, let's go to the candlesticks. This is where the magic is. This is where the magic is, and I want you guys to really pay good attention to this, because it is going to be the difference between you doing it well and you making money with it. Okay, because some of you can identify the setup, you do everything right, but you will still lose. The reason is very simple, very, very simple, and I'm going to show you why some of you do the right things, but you still lose money. You do the right things, but you still lose money. Very simple reason. Now, this particular market, we had a setup, all right, everything formed like we expect, okay, here. But trust me, this particular week here, I believe you guys can see it. That particular week, that is the difference between the losing traders and the winning traders. That is the difference between the losing traders and the winning traders. The reason is that a lot of you are in groups, so many groups, and you have been taught that you can be so perfect in market that you can only use 5 pips. I see traders using 5 pips as their stop losses. I see traders using 10 pips as their stop losses. What do you want to achieve? Perfection or money? Choose one. You want to be the perfect trader or you want to make money? I always ask this question. Is it perfection? Is it about perfection or is it about making money? If it is about making money, please stop using 5 pips and 10 pips as stop losses, because the market at any point in time can just wake a little bit, just a little bit, and you'll be out. And right after you are out of the market, look at what happened. Look at what happened. The market just went straight to the top. So it's not like you were wrong with your analysis, but you will never make money. You never made any money on this. You were not wrong, but you never made anything. The reason is because you are the perfect trader and you can use tight stop losses. People are preaching that tight stop losses, tight stop loss. No, I don't even put in any stop loss. I don't, because I have this what we call mental stop loss. Okay, when the market gets to a level where I feel like I am wrong, I just close the trade. And the people who take my signals, they are witness to that. And the reason I do that is to prevent some of these manipulations coming in. You do the right thing, everything is right. The market will just come and wake you, and then everything goes. So next time when you join a group and they are preaching 5 pips, 2 pips, and some even use 1 pip as stop loss. Please, if it is making you money, go ahead. I don't have any problem with you. If it is not, rethink. Just rethink, because you are not here to be the perfect trader. You are here to make money. So what I encourage is that give your trade room to breathe. I always say this: give your trade room to breathe. Even if it is 50 pips stop loss, you can use that. And what you can do is, instead of using a 0.1 or a 1.0 lot size, then you can reduce your 0.1 to 0.05 so that you can increase your stop loss. Or instead of 1.0, you can use 0.4 or 0.5 so that you can increase your stop loss. Because if you use your 1.0, you are going to lose money. You are going to lose money. Like you are going to lose money in the market. Um, one second. Yeah, you are going to lose money in the market. If you use 1.0, you are going to lose money. But if you reduce it to 0.4 or 0.05, the market will give you something to eat. You get something to eat, guys. You get something to eat. You were trying to be perfect. You were trying to cut it at the right spot, and you lose money. But if you just try to reduce your lot size, you make something. So instead of looking for $1,000, you made $400. It's fine. You made $400. It's better than you losing your $600. So guys, that is something very little I have for you. Yes, you can learn this in depth. I can sit with you one-on-one and take you through everything step by step, and all the other strategies that I know at just $75 if you want. If not, you can also take advantage of this free tutorial that I will be doing. Okay, it's now that I'm starting, so I want to build the momentum. You guys, you are the only people who can encourage me to do it more just by joining. If you keep joining, I can keep doing it for you guys. Okay. Yes. I don't know if you have any questions. Let me just try and see how I can answer them.
I was looking at something on USD card. I think it's forming the same structure there. I can check it for me. USD card.
Could you please repeat yourself, Samir? I didn't get you.
Yeah, I said I was looking at the same structure on USD card.
Okay.
So
USD card.
Yeah, USD one item.
Let me see. USD card. Okay, so we are on USD card.
I think market was down. Then I think it got broken.
Okay. If I understand you well, we are looking at the setup at the bottom here, right?
Sure.
Okay, so yeah, I think it was a nice setup. We just didn't get the right return. Okay, so let me see whether we are on the same page. We are the market giving us a raid here. Okay, it raided this low, or let's say it took the stop losses there, and then it broke the structure here. Correct me if I am wrong. So here is kind of the setup, something like this, and then it went up, right?
Sure.
Yeah, so this return should have come a little bit lower.
Yeah,
so I think that was a miss, and it's fine. It's better to miss trades than to lose. But this one is going, so yeah. If you are able to, practice this setup very well with the right confirmations, I don't see any reason why you shouldn't be making money. If you are not making money, then you have to watch your risk. I think that could be the only reason why you are not making money. People want to turn $100 to $1,000. I'm not saying it's not possible. It is possible, but the chances of you blowing that account too is very high. It's very, very high. So yeah, I think you spotted the right setup. And yeah, it's good. Guys, any contribution, any setup you guys want us to look at? I wanted to do this for 30 minutes, but it looks like we can extend it a little bit.
Okay, so I wanted to ask, you were talking about the stop losses. One of my mentors said there's no bigger stop loss. Some of us, I think, sometimes it's due to a greediness, a quick way of making money. So we use bigger loss sizes. See, you have a trade with 50 pips stop loss, and you want to use maybe one loss size. You are having a $100 account, so if you use one loss size, thinking that you're going to make money within maybe 30 minutes or 1 hour, maybe the trade will go against you and you lose all money. So I think being mindful of stop loss or sizes will help us, achieve our goal. So thank you for your advice and also this lesson.
Yes, I think I don't know the way I trade. I think if anyone is in my strategic loading group, that is it Bright? I think Bright is in the group. I think Bright can testify to how we go about the. I don't know whether he wants to speak, but I think he's in the group, so he can say something. Right? Okay, let him. Yeah, right. You talk? You can unmute yourself and talk.
Yeah, hello.
Yeah, we can hear you.
Can you hear me?
Yeah, we can hear you.
Oh, okay. I'm in the specific loading group, and then I must say that the trades are doing very, very well with us over there. I'm having $80 now from $50 that I deposited last week. This is exactly a week I started taking the trades, and they are on point. The stop loss is mostly he even tells us to take the trade without putting the stop loss until we hear from him to either put a stop loss or to get out of the market. So I think I even sent you a screenshot right during the session when you were making that is that you believe that we had up to $80 as an now. So I posted mine to you personally.
Oh, okay.
To use.
Okay.
Yes, yeah.
Yeah, I think
so
I have
to even
to
show it to them. And
yeah, I have to share that. I didn't see it because I was.
I didn't see it. I sent it whilst you were on the call.
Okay. Let me see. Yeah. Yeah. I've seen it now. Let me. Okay. Okay. Yeah, I've seen it. I think. Yeah. Yeah. So yeah, those who can see the Telegram. Yeah, I think this it. The guy. You started from 50. So what was the return? This like
I started
over 50%.
This 30. Yes, over 50% now so far.
Wow.
Over 50%.
Crazy. Yeah. Guys, and it's not like we are over risking. Okay, we are not actually over risking. We are basically taking minimal trades. But I'm impressed. Actually, I am impressed.
Me myself, I'm actually impressed. I told you my target. My target was to raise the money, come for the one-on-one mentorship.
Yeah. Yeah. Can you guys see his account?
Yeah.
No, I think just showing this, someone may think that this is your actual account, so you should have sent the history.
Oh no. Okay, I will send it.
Yeah, the history is what
I will send you the entire history.
Yeah. Okay. So guys, these are some of the things we are just basically doing. And it's the same thing that I'm teaching you guys. It's not like I'm hiding anything. Okay, I'm teaching you this thing for free. So you also can take.
You have the profit made.
Okay, let's see. Okay. So yeah, your profit is $30. Okay. All right. Yeah. So I now also believe it. Okay. Yeah. So guys, he started from $50, and you see that now he's making a profit of $30. I think percentage-wise, that is over 50%. In as much as I don't encourage making that huge returns, especially if your account is big, you should be expecting, minimal returns. If you have a $50,000 account, you shouldn't be expecting to make 50%. You stand a chance of blowing the account. Okay, 50,000. If you are making 5%, or even if you are making 10% maximum, that is $5,000, and you should be good to go. Trading is about having a bigger account and looking at things in terms of percentages. 1%, 2%, 3%, 5%. But some of us, we look for 1,000%, trying to turn $100 to 10,000. So yeah, I think social media is also another influence of that. But I mean, it's all good. I mean, if you start becoming a good trader, I think you have to stay off social media for some time so that you can get to know yourself better. Know yourself. Some people, where they are getting their funds from, you have no idea. Some people, they are getting huge funds from somewhere, so when they blow the account, they don't care. But for some of us, maybe it will take you even a month or two to even fund your account $100. Then you come in and you are coming to play with it. You want to be like someone who can blow $1,000 today, and the person will get another $1,000 in the next 5 minutes. Though, so social media has been one of the bad influence. Also, it is also good because it made us know about trading. But Charlie, if you start becoming good, or if you find a way of if you are listening to this, you have to know that you don't have to let social media influence you to think that you can turn your $100 into $100,000 in the next 2 months. That is even the bad aspect of it. If you want to turn $100 to $1,000 and you give it a time range of 1 year, I understand. But you want to turn $100 to $1,000 and you are giving it a time range of 3 months. Guys, I think we have to call it a day. I'm very happy that you guys came. I think it's been interactive, and I'll try to do this often. Guys, support me by joining. And are you guys okay with the timing, the 12 p.m. time? If you are okay, then I will be doing it often around that time so that we can all trade together. Is it 12 p.m. okay for most of you?
Yeah, the timing is perfect. It's very good for us.
Yeah. So yes, and another thing is I will encourage you guys to please try and join the strategic loading group. It's really gonna help you. I take trades. I just send them free signals, but I mean I can't just add you. You have to have an account before I add you, and the minimum account is $50. This guy started with $50 and he's making $30 already. It means that if you are someone who started with $1,000, imagine you will be making over $500 now. And the only rule to this is that because I don't charge you, you need to make sure you are under my affiliates. I make you money, you also make me something. Trust me. If you have to trade this, I can show you this. I checked this guy's history. He has already made $30, right? I checked his commission. He's only giving me $1. You see how imbalanced this thing is? $1. He is making $30, but the commission I'm getting from him is only $1, and I'm cool. But if you are someone who don't want to be under my IB, but you still expect me to send you signals, my friend, no, it doesn't happen anywhere. Okay, I spend a lot of time to analyze. I spend a lot of time to even send you signals. I watch the market to update you on what to do. So what can you do for me? Just be under my IB. Let's build a network. But please try and join. $50, save for this December so that your $50, when it gets to 100, you have some $50 to enjoy your Christmas. But most importantly, prepare for next year, because next year I am going in hard. I am so much energized now, and you guys need to really take advantage. I'm going in hard from next year. We're really going to make a killing in this market, and we are really going to come up, and everybody is gonna hear about Calculus and Calculus FS and the community. So stay blessed, guys. I really love you for coming. I'll keep doing this. Since you said the 12 p.m. is okay, I'll keep doing it often. If you don't have any question, I want to close unless you have something to say or anything you want to add. Okay. Okay, guys. Stay blessed. I'll see you again tomorrow. Peace out, guys.